overlooked and unloved. 3 up-and-comers in the mining and metal sector. I'm a mining editor. I'm with Kitco. And what we hear is we hear stories on a daily basis, and my job is to actually post them. Stories by meaning is that we're getting information, we're getting news, and our responsibility is to put it up into headlines. What we receive is we receive a lot of stories, and we hear a lot of the same themes throughout. We hear that gold is going up because of debt levels. Gold is going up because of geopolitical concerns. Palladium is making a run right now because of what is actually happening with emission standards. What I want to take you on this survey is I want to show you some of the stories that you may not have heard. Over the past year of myself being working at Kitco, I want to take you through some of the stories that I think haven't got enough press coverage, haven't got enough attention, but are as equally as important. So in short, we're going to be getting off the beaten path on this presentation, and I look forward to taking you through it. Why are we doing this? It's because this is the mining sector. It's why we're all here. It's because we have the dizzying highs and the low lows. We want to make good investment decisions at the right time in the market. So I'm just bringing this to your attention. Note about myself, my name is Micheal McCrae. I work for Kitco, where I'm the mining audience and I'm the data intelligence manager. With over 5 million uniques per month and an app with over 2 million downloads, we are the reference site for precious metals in the resource sector, and we have unparalleled reach in that. One last piece of business on disclaimers. I'm not a financial advisor. If any of this thing is of interest to you, please do your own due diligence. Let's start with our first up-and-comer. Diamonds. Diamonds is pretty much the worst place you can be right now. We've had 5 years of declines into that space. Taking a selection of some of the dedicated diamond stocks that we have in this place, you look at gem diamonds, it's been cut in half, and then you continue to go down the list. Do we need more information on diamonds? Yes. Anglo-American Diamond Division reported a 26% drop in revenue in H1. And very dangerously for De Beers, they ended up cutting the price of their diamonds, which you don't want to do when you're a luxury good, what you don't want to do when you're considered to be something that is precious. And Stornoway Diamonds went bankrupt this year. Bad time for the diamond makers. But we're seeing signs of a turnaround. Rio Tinto's Argon mine is closing in 2020. By the way, that is the 4th largest diamond mine in the world right now by volumes, and they produced 8 million carats on average per year. Also, what was exciting to see is that, or we can see glimmers of hope, on their final tender, they were able to double-digit growth the amount of diamonds that was produced through their last tender. Other mines are approaching their end, and there's no replacement mine in the future. What it is the typical story regarding commodities. And that is that you have a spike up, and then everybody rushes into the market. But after these 5 years of declines right now, there's been no investment into the space. We're seeing more mines that are being taken off of the market, or they've just come to their end of their lives and there's just no replacement. Diamonds also are maintaining their value. They're not old, they're not fur coats. I hope nobody's wearing a fur coat right now. Good. Despite declining marriage rates, cohabiting couples are still buying diamonds. The Asian market is strong. What we see in there is that in America, 70% of the couples and 70% of the brides are buying themselves diamonds, whereas in China it's about 50%. That is rapidly rising right now. And then also we see gifting is rising as well too. So it's just not for commitment, but it is also giving a gift for somebody. Diamonds are still in style. But you don't have to take my word from it. You don't have to look at what the changing mores are. You don't have to look at what the changing social mores are. Just watch income growth, because this is the best predictor of what's going to be actually happening with demand for diamonds. This is charts from Paul Zeminski, and I recommend that you do follow him because he's an excellent analyst regarding diamonds. We are looking at projected middle-class income growth that is going from about a double gain between 2015 and 2030, whereas you can see that diamond production has peaked around 2018 and is now in a steady decline out of that. So we're looking at reduced supply and we're looking at increased demand which is a great place, and you're looking it up for bottom 4 diamonds. Now, I know there's one other thing that everybody's asking about is what about synthetic diamonds? Is that an issue? Synthetic diamonds are pretty much, if I put one in front of you, you wouldn't be able to tell the difference unless you had a special piece of equipment. Synthetic diamonds, however, are just not holding their value right now. You're looking at a 30% drop per year in the prices for diamonds. And also, if you have a synthetic diamond and you're looking for a sale on it, you're not going to get any sale value off of it. Whereas if you're selling an actual diamond, it maintains around 50% of its prices. Interesting point as well, too, because it is also considered a type of store of value right now, and with the run-up in platinum, with the recent run-up in Bitcoin, and obviously the run-up in precious metals, it might be another kicker for diamonds. That's my first up-and-comer. Second up-and-comer. Talking about stories that we've heard and stories that have gone through, we all have heard about battery electric vehicles, and we've all heard about the metals that are going to be needed to maintain the revolution, to actually create these new generation of vehicles. And we realize that there's going to be shortfalls in nickel, in cobalt, in lithium, in graphite, and vanadium, and copper. That goes down the list. There's all shortfalls, and there'll be people out in this market that is going to be able to tell you some excellent stories about that, and it is true. There's shortfalls throughout all of that. But let's go take a look again at this chart. You might notice that this is from 2015, and this is what's going to be projected when we're selling over 40 million battery electric vehicles on an annual basis. This was data that was provided by Precious Metals Commodity Management by Matt Watson here. But also look down the circled in yellow, fuel cell electric vehicles. Can anybody tell me what metal is going to be used for fuel cell electric vehicles? Begins with a P. I'm going to pick on you over there, sir. Platinum. Platinum is a correct answer. Fuel cells have a niche in the upcoming revolution with cars when we change over. They have reduced weight due to higher energy density. And what that means is that if you have a standard passenger car, battery electrical vehicles works fine. But if you have a heavy-duty trawler, heavy-duty hauling truck, that is going to be something that is going to be better suited to actually using fuel cell electric vehicles. Why? Because when you get to a point with adding batteries to a car to extend its range, to make it last longer, or to haul more things, you end up getting to a point of diminishing returns. You can't keep adding more batteries because you make the truck heavier and heavier. So what we're seeing with the heavy-duty vehicles is that there might be some real advantages to going with the fuel cells. Longer range, quicker refuel time, 5 minutes as opposed to an hour when you're using with battery electric vehicles. And also the most important part in this is inertia. We have structures with long-haul trucks that have actually been set up around the fact that they have timing issues, up 24/7, the fueling stations. These are not inconsequential things. And then if you have somebody that is a supplying logistics company, if they can maintain their same uptime, they can maintain their same infrastructure, going to fuel cells makes a lot more sense than actually going to the new technologies, battery electric vehicles. Do you want more proof on this? Yes. Burnaby's Ballard Power Systems has just made a huge run up because of the number of deals that are coming through, and by the realization that this technology is something that is really going to be part of the future energy and the future metric mix for doing the powering of long haul vehicles. And platinum is nowhere near being able to actually provide that future for the supply of fuel cell electric vehicles. We're really off at a pace right now. Looking again from Matt Watson, and I'm reading off the chart here, if you focus all of the world's available platinum today, we could only convert 2 million of fuel cell electric vehicles globally. And if you go back and looking at 8 million, which is what we had on the chart here previously, or up to 10 million, we're nowhere near in terms of actually being able to provide this. This is a long-range future. This is 2050, but it is something that we look at in terms of a long-range change within the metal space. Third and last up-and-comer, mining suppliers. Bit of a curveball here, but I really want to take this place because there is a revolution going on in mining right now, and then that you have to be aware. Mining suppliers, You probably not hear about this as much in this conference because this is more of a junior conference, but we're talking about Epiroc, Metso, Hitachi. These are all the large suppliers to the mining companies. These are the people that make the large underground, they make the large haulers, they make the large underground haulers for all of their. The reasons have to do with digitization and automation at mines. What we're seeing is that as mines become more digital and there becomes more automation, this favors the services, and more of the value, more of the operational work is going to be going to the mining suppliers and away from the miners. Why is this? Simply on complexity. When you're building a mine, you are going and you have to get yourself an automated truck. You're going to need more. You're going to need more sensors. You are going to need more. You're going to need the enterprise resource systems. You're going to need the software, and you're going to need the skills to implement this. This is not a mine from 30 years ago. This is a mine of today where we're doing automation and we're doing digitization, and you need the skills and the resources of somebody like these major suppliers that can actually do this work. Data. Data is also what you've heard about in terms of Google and in terms of what they talk about in terms of like the flywheel effect. If you can get more data, this is what allows you to actually have automated cars. This is what actually allows you to do that machine learning with large data set. Now, when you have these companies that are selling into like the large miners, what is happening is that they have an ownership over that particular type of data. But when you look at the mining suppliers, they will have an ownership, or they will at least have an into all of that data. What the mining suppliers are doing right now is they're going and they're saying like, I detect that there's an issue with your loader. I detect that there's an issue with something happening. My machine learning is telling me this X is happening. So if you have a particular company that has trucks that are operating on multiple mines, you have data from multiple mines that provides comparison and provides better analytics and a better control over variance than miners. Interoperability and centralization is where miners want to get to next. They want to be able to take their mine sites, and if there's going to be rain, if there's going to be a change at the face, we have to make sure that it ripples through the entire organization. That has to go through so you can make changes in your truckloads. You have to make change in the paths that they're taking to get there. You have to make changes in your mineral processation. We have a lot of siloed IT systems right now that exist at mining sites. We want to eventually put them together so that then we get all of the people operating coordination. Again, that is going to be happening with the mining suppliers as opposed to the mining companies themselves. All of this work around digitization automation, if you're asking a miner why they're doing it, and that's because they want to reduce people at the mine site. Mine sites are dangerous places. People do die in them. People do get hurt at them. And it is just an issue of trying to get them out of there, because if you do that, firstly, you're really helping with your mine safety, but also that allows you to have much more efficiencies because you're not dealing with a health and safety issue. But what's happening when you're making that change is that you're taking one of the specializations and you're taking one of the values it is in terms of managing those human resources away from mining, and then again, it's going back to the suppliers. This is talking to one of the suppliers that I had here, and just to drive this point home, it was that they were selling their whole package. They were selling their whole fleet to the mining sites. And what they were doing is they're saying, you can list off the package, you can get my mining trucks, you can actually get what is actually happening with their software, and then we'll offer a full package for you. And then just looking at how much of the operation that the mining supplier was going to be taking over, they were given a counter offer and said, well, why don't we just pay you on a per ton basis? Why didn't we do that? And then, my contact is saying, we don't want to take that contract yet because we don't consider ourselves to be miners. There is a structural change that is going on within the industry, and there is going to be a shift in terms of the value that's actually created between the mining suppliers and also the mining companies. My name is Micheal McCrae. I want to thank you very much for your time. I also want to thank Igor Dutina, who's going to be up shortly, and he's going to be talking about Kitco. Thank you again, everybody. Have a great rest of the day.